Within the apparel industry, the innerwear segment is witnessing a shift from being viewed as an essential product to a fashion accessory with focus on quality. In our Ideas for Profit today, we'll find out if there are meaningful drivers for growth in this particular segment for 2021 and if the leading companies in this segment merit investors' attention as well. Well, the rising young population as well as branded products are the prime drivers of this trend going forward. With a huge unorganized segment of close to about 60 to 65% of the industry, the implementation of GST as well as the financial stress of the smaller players post-COVID-19 disruption are the key drivers of this meaningful shift to value-based branded players. Now, the mass segment innerwear players have actually seen a quick recovery from the COVID-19 setback. Both Rupa and Dollar Industries witnessed mid-single digit growth of 6% in Q2 FY21. Now, sales have further gained momentum with growth expected to be better even in Q3 of FY21. We also expect this trend to gather steam in FY22. Now, Dollar is also revamping its distribution strategy and also filling the white spaces in its product portfolio. It is also aiming to eliminate the semi-wholesalers and also directly approaching key retailers who would be mapped to its distributors as well. Further, the company would launch brassiers in FY22, which would fill in a significant gap in its product portfolio as part of the women's innerwear segment. Now, currently, women's segment actually contributes about 15 to 17% of Dollar Industries revenues when you compare it to 60% for the industry, which indicates a huge growth potential going forward. Now, Dollar's advertising expenses are close to about 8% of the revenues. The company also aims to control the advertising costs and also aims to reach 15% of the operating margin over the next 2 years per se. Now, Rupa is a leading mass and economy innerwear player with a legacy of more than 50 years that we've seen, also extensive product range and more than about 18 brands that the company has. Now, Rupa primarily is into menswear or men's innerwear segment. It is now expanding its offerings in the women and children segment as well, which is dominated currently by the unorganized players, and thereby this provides a huge growth opportunity going forward for Rupa. Rupa, being an East-focused player, is now expanding its presence in South and in North, and that is to tap the newer markets. The company is also planning to set up 50 exclusive business outlets, that is through the franchise route, as compared to the current 7, and enhancing the tie-up with e-retailers such as Amazon and Flipkart and also the large format stores to boost sales really. Now, recently, the company has put into effect a scheme of demerger of its wholly owned subsidiary Oban Fashions Limited as well, and subsequently the merger of it into the listed entity Rupa. The company does expect the merger to create synergies and also provide benefits of scale going forward from here. In FY20, the subsidiary had reported a loss of about 18 crore rupees, and the improvement in performance would definitely aid the overall profitability going forward from here on. Now, both Rupa and Dollar have similar business models and return ratios, and they're also likely to benefit from this shift towards organized players that we are witnessing currently. Now, Rupa is trading at a discount to its long-term average. With double-digit earnings growth and also the easing of working capital post-COVID, the multiples could also re-rate going forward from here. Now, Dollar Industries is trading at a 40% discount to Rupa. With the increasing retail footprint and also again the improving working capital scenario, we do expect this discount to also narrow going forward from here. So investors with a long-term view can definitely look at adding both these stocks to their portfolio.